DocuSign reported quarterly financial results on December 5th, 2024, that sent the stock price soaring on the day after the release. Of course, I'm happy about that. I've been recommending DocuSign stock as a buy for a little over a year now. So I'm happy to see the stock price pop the way it's popping over 20% on the day after the results. So I'm going to review these latest figures and highlight the reason why the stock price is soaring, and then answer whether or not it's too late to buy DocuSign stock. Do I think that if you didn't buy it already, if it's too late, or if it's time to take profits? If I'm downgrading the stock, I'll let you know all about that in this video. So let's jump right in. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, DocuSign reported third quarter revenue of $755 million, which was an 8% increase year over year. Billings increased by 9% year over year, $2 million. The difference between billings and revenue is time of recognition. Billings are contracts the company signs, and then revenue is when it delivers on the contract. For instance, if a customer buys an agreement to use 100 signatures, that would go into billings, and then it would turn into revenue as that company uses up those signatures it purchased or those verifications that it purchased. So billings are an indicator of future revenue. And so when billings increase, signals an increase in revenue, and a billings decrease signals a decrease in revenue is oncoming. So billings is like a future indicator of the company's revenue and profitability in the coming quarters and year or two. So in the latest quarter, net income per share increased to 31 cents, up from 19 cents in the same quarter last year. So a more than 50% increase on the bottom line for DocuSign. Of course, this company has a strong tailwind behind it. I think electronic signatures are a no-brainer to have a tailwind for several decades more. It's an incredible inconvenience for people to go into an office to have something signed, right? If you're a customer, let's say you're signing a document for whatever reason that document might need to be signed, and you have to travel across town to sign the document, or even if you just have to go down the street, it's still an inconvenience. Why would you need to leave your home to sign that document when they can just email it to you and you can look it over and sign it in the comfort of your own home and be able to read it, take your time, sign it, and then send it back, instead of being at the company's office where maybe somebody's waiting right there across the seat from you and you're under pressure to hurry up and read it and sign whatever it is you have to sign. So it's incredibly convenient for the person signing the document. And then on the other side, it's also incredibly convenient. If you're a business, you have to accommodate for people coming in to sign your document, right? You have to have someone greet them, take them somewhere to sit down, give them the document, have somebody that's giving them the document, telling them where to sign. All of that takes man hours. You need space. It's extra cost, it's extra time, and it's inconvenience on the business side as well. So both sides of the equation would benefit going to electronic signatures. The only area where I foresee remaining paper document signings are in the incredibly security sensitive areas where you need to have a secure environment. You can't have these things traveling all over the place in emails and being visible by other people. So those are the areas where I think will remain paper signatures forever, perhaps. But 90% of the use cases, I think, will eventually go towards electronic signature. And that's a big tailwind for DocuSign. But still, even though that market is moving towards that area, it's a relatively small overall market, which benefits DocuSign in one way, in that it doesn't attract very much competition. When you're operating in a small market like e-signatures, which is worth less than $100 billion annually, it doesn't attract that many big time players that want to say, let's go into this lucrative market. Like, we have the technology, we can do it too. The reason why many other companies don't do it is because it's a relatively small opportunity. They don't want to dedicate resources to this relatively small opportunity, which is likely to remain small for a long period of time. It's not like because the market is moving to electronic signatures, it's going to create this boom in the amount of signatures that get signed. The total amount of signatures that get signed will still be related to economic growth, and that is not going to be growing very quickly. It's the transition to electronic from paper that's going to benefit DocuSign. And so there is competition in the space, but I don't expect very many new competitors to jump in because it's not that large of a market. It doesn't offer that big of an opportunity. Free cash flow was one thing that was not great. The company noted that free cash flow fell to 211 million from 240 million in the same quarter last year. Now, the company is utilizing artificial intelligence to provide more of an ability to surface insights from more array of agreement types. And then AI assisted review was launched with availability for Microsoft Word, allowing for AI generated markups, language recommendations, and generative Q&A. It's another reason why I think that the shift from paper to digital will happen more quickly, is because AI is making those electronic documents more valuable for businesses. They can gain more insights from those documents if they're electronic. Imagine having a whole file cabinet like what I have behind me, full of documents of signatures, and then you need to find something in there. Imagine having to go through all of that, sifting through all of that. It would not even make it worthwhile, the insights that you're going to gain compared to the time it takes to extract the information. Whereas with digital documents, that is a feasible opportunity now. All right, so here's what has DocuSign stock price soaring. The company forecasting that in the quarter that will end on January 31st, 2025, or in other words, their next upcoming quarter, billings are going to increase to 875 million. 875 million. Now, that's a huge increase from the current quarter where they reported billings of 752 million. So they're expecting a big surge in document signings, in contract signings in the upcoming quarter. And that's what has investors excited, that business is seeing an acceleration in demand for its products. So I highlighted DocuSign stock price surging following the earnings results, and you can see that here from around $80 a share all the way up to $107 per share. Year to date, it's up from $60 to $107. Again, I'm happy about that. I recommended this as a buy all year long, and I'm happy if you made money on this recommendation. DocuSign now trading at a forward PE of 29, which is up from where it was trading to start the year, which was less than 20. It was around 18, 19, but the business is also better than it was earlier in the year. So to update my recommendation on DocuSign stock, I still think the stock is a buy. I still have it rated as a buy because the price increase was justified by the billings increase, which is going to turn into revenue and increasing profitability for the business. And artificial intelligence is providing an accelerator to that shift from physical documents to electronic documents, which is going to accelerate that transition and make revenue growth a little bit faster than expected for DocuSign. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.